Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Recently I've been looking at my portfolio and I've talked about it in my last video where I want to see, basically I want to go through every single stock that I own in my portfolio and why I own it. I want to talk about what my plans are going forward because I'm going to rebalance my portfolio beginning of 2023 inshallah. What that means is I'm going to get rid of some companies and add new companies, and maybe not add new companies, but use that money to actually buy some of the companies that I want to keep for a long time, right? So I will be doing two set videos. So first one will be I'm looking at every single stock that I own in my portfolio first of all, okay, and I'll show you the criteria in a second. I own 30 different stocks in this portfolio. One of them is an ETF. The 29 of them are individual stocks. I'm going to go through every single one of them and what my plans are going forward. Okay, so today I'm only going to focus on the first 15 companies or 15 companies within inside this portfolio, and then next video I'll do the last 15. I will show you what I'm going to sell, what I'm going to hold them for a long time, and then third video will be about the new companies I would be adding to the portfolio. So I've got a set of companies I would like to add to my portfolio. This portfolio, as you can see right now, is about £61,000. My plan is to max my ISA account. As you can see right now, I forgot to actually mention this in the last video. As you can see right now, I have about another £8,500 to add to the portfolio, okay, before the 7th of April. I will be doing that inshallah. So I will be aggressively adding more money into the next, basically in the next few months into this portfolio. And what my plan is to sell some of the companies, add another 8.5 before the 7th of April. And then because of that, I will be adding some new companies that I think are worth adding to this portfolio. Remember, this portfolio is still basically on progress, is not finished, it's not going to be finished overnight, okay? It might not even ever be finished because remember, that's the nature of the stock market. Some companies actually do well, some don't do well. So the ethos might change, my perspective might change. And this is why it's very difficult to copy someone's portfolio because you never know what their plans are going forward. So I might say, okay, 3M is amazing, and the next month sell it because my thesis have changed. So you have to really be careful, okay? When it comes to that sort of a thing. I'm definitely not financial advice. I'm just sharing my journey, and what I'm doing right now is literally being transparent and actually explaining to you what I own, why I own, and what my plans are going forward. And I'm also going to talk about from Sharia compliance side of things as well. If you love that kind of content and you are enjoying being here and watching this type of videos, please like the videos because it genuinely helps the channel. I haven't been posting enough in the last few months, but I will be because I've got a little holiday coming up soon, inshallah. I've got a few exciting videos I plan to release as soon as I can. Let's get started first of all on what we are doing here today. Right, so the criteria is very simple. We've got the ticker, we got the company. I want to look at the companies that have a wide economic moat, okay? I want to see companies that are growing their revenue, especially in the last 5 years. I want to see if that is happening. If that is not happening, then I have a question mark next to that company. Because if they're not growing their revenue in the last 5 years, what's going on in that business? I want to see how much cash this company has, because cash is king, in my opinion. Companies that pay dividend especially, they should have a free cash flow. Companies that don't pay dividends, they should also have a free cash flow, because remember, that's the money they use to reinvest in the business, to buy back their own shares and so on. I want to see if they pay a dividends. I want to see the payout ratio less than 65%. Okay, less than 65% is my cutoff. Okay, kinda 60 or 65 depending, but less than 65% is fine. Okay, I want to see 5-year growth rate in terms of dividends growth rate of about 6 or more. Okay, 6 or more percent. Then I also want to see return on invested capital greater than 10%. Return on invested capital basically is the higher the return on the invested capital, the more likely the company is to achieve sustainable long-term value creation. Okay, So what is that company doing with in terms of creating more shareholder value? That's the most important thing. Okay, we're also looking at for growth, so I'm looking for 10%, by the way, when it comes to ROIC. Growth estimates for the next 5 years. We want to see where the company is heading. We also want to see the interest-bearing debt less than 25%. Okay, normally 30% is basically the cutoff for basically when it comes to Zoya and so on. Some people say 33%, whatever it is. If it's less than 25%, I am comfortable. More than 25%, it can change overnight and become non-Sharia compliant. So you have to be careful. And then I want to see whether I should hold this company. I will let you know whether I'm holding or selling. Trust me, there are some companies on this list that I will be selling soon enough. Okay, so let's get started and look at the first company. The first company is Adobe. Adobe is one of the companies that I've had in my portfolio for a few months now. It has a wide economic mode. Yes, it has a 5-year growth, basically grown revenue in the last 5 years. Free cash flow of $7 billion. Although they don't pay any dividends, that's enough to buy back shares, to purchase other companies and so on. And they have return on invested capital, okay, more than basically what I'm required. So 23%. Next 5 years, they're expecting the company to grow about 13. And they have a basically interest-bearing debt less than 3%, which is absolutely brilliant. For now, I'm holding this company, okay? I will be buying more. Okay, when I say hold, it doesn't just mean just hold it forever. I will be holding for now, but I will also be looking at opportunities to buy more of this company. I sold it a while back just to kind of rebalance my portfolio. So going forward, I will be adding to this company at some point. Next one is a very difficult one right now because it's gone down quite a bit. This company is Salesforce. Salesforce is one of the great companies out there, in my opinion. They have a great products in terms, so their products includes from sales to services to markets. So they work with other companies and they do all of these things for the other companies to make sure these companies are running efficiently. And obviously they are targeting their customers and they know what the customers want and so on. So they have a really great product. And recently, basically, if you look at their latest earnings report, they've talked about basically a total addressable market of by 2026 of almost 290 billion plus, which is very high. And they have a loads of, like I said, a very well diversified basically products. And this is one of the reasons I'm attracted to this company. The fact that the revenue is growing, as well as the company acquires other companies to grow their business. But the only issue is recently, 2 of their CEOs actually left the company after the latest earnings. They actually basically reported that 2 of them will be leaving. Now, the reasons we still don't know yet, but because of that, the company, I think the stock went down like 9-10% on that day, whatever. I will definitely be adding to this company, okay, in the next few weeks, because right now it's really attractive. I think it's like $130 per share or something like that. And my average is about 300. So I'm going to average down into this company. I also have a video planned to actually go through the latest earnings and the reasons why I will be buying more. So I'll let you know as soon as that video is ready. The next company is Microsoft. I'm sure you're not surprised. This is one of the great companies I own in my portfolio. It has a wide economic mode. It has a growing revenue. It has a free cash flow. Payout ratio is very low. Dividend growth is about 10%. Return on basically invested capital about 24%. Growth 13%. Debt basically low, and basically interest bearing debt is very low. And basically I will be holding this company for a long time. Okay, I might not add to it yet because it's quite a bit, and there are other companies like Salesforce and Adobe that I'm still down. So I might average into these companies and wait maybe for a better entry for when it comes to Microsoft, because I genuinely do believe we have not basically come out of recession yet, and the stock market has got a long way to go. I mean, in the last couple of days it's been up and down, but I'm sure that's something that's going to continue in the next few months, right? Visa, another great company that I own in my portfolio, one I've kind of neglected for a long time. This company has everything, basically, from free cash flow to payout ratio to 5-year growth rate of dividends wise. But yeah, basically return on invested capital. In terms of next 5 years, it has everything, and it has a very low interest bearing debt. And this is what I love about the technology companies. when it comes to the interest bearing debt is very, very low. Again, another company that I'm going to hold. Okay, I might add to it, I don't know yet, we'll see. Broadcom, another company that I own in my portfolio. It has a wide, narrow economic mode. Everything else ticks perfectly. Look at this payout ratio, 47. And then when you look at the payout ratio, the dividend growth rate in the last 5 years, 43%. I don't think that's sustainable. They do have enough cash to cover these dividends, okay, and they are growing this cash very fast. So in terms of return on total return on invested capital, we're looking at about 13% almost, and then 15% growth every year for the next 5 years, 17% when it comes to, almost 18% when it comes to interest-bearing debt. So out of all the technology companies I've shown you so far, this is probably has the highest, and as you can see, it is definitely hold, and I will be buying more of this company as I believe it is undervalued at the moment, and I will share that with you guys very soon. Qualcomm is another company, has a narrow economic mode as well. As you can see here, another great company, but they are saying, right, this is interesting, from growth estimates in the next 5 years is actually 7%. Although I said it's a hold right now, it's a minus 7%, sorry. And that's interesting. This comes from Yahoo Finance. So the Yahoo analyst actually saying this company is not going to grow their revenue. It's actually not going to make anything. Next year, I think is okay. But the next 5 years, the 5 years after that, not the fiscal year right now, is actually going to go down. So it will be interesting to see that. I am down a little bit. I do like the company, but there are other opportunities in the semiconductor company, basically sector. So I will be interested to look. Although it says a holder for now, there is a question mark next to Qualcomm right now as we speak, because I want to see what other companies out there. Companies like maybe Texas Instrument might be a better buy right now. So we'll see. I'm looking at it. I will be basically evaluating it, but it's not going to be disappear, it's not going to disappear out of my portfolio anytime soon, but I am actually evaluating this company soon as well. Okay, so the next one is ASML. This company, I've been adding to it lately, and I will be adding to it. I'm not going to sell. As you can see, it has great financials when it comes to in terms of the growth, in terms of economic mode, in terms of free cash flow, and so on. And they do have a dividend, okay? And when you look at their next 5 years, it's almost 30% growth, which is absolutely amazing. They have very, very low debt. And obviously, basically, for me, it's definitely a hold. Next one that we'll be looking at is Cisco. Okay, Cisco is one of those companies I bought recently, and I'm glad I did. It has a wide economic mode in terms of they growing their business. Okay, they have an excellent free cash flow. They've got payout ratio quite low. Growth rate is 6% or more, which is what I'm basically I need. Okay, in my portfolio, return on invested capital about almost 16%. Growth in the next 5 years, that's what you expect from about 6-7% every single year. And they have a very, very low interest bearing debt of almost 6%, and is definitely hold. I will be buying more. Okay, recently it's kind of gone up about to almost to $50 per share, but last couple of days has actually gone down a bit, so I will be adding to it. Now, the next one is Procter & Gamble. Again, one of the best companies out there. In terms of when it comes to 5-year growth rate, is actually 5% or more, basically just 5%. But I am happy to hold this company as it actually is a dividend king. They have excellent free cash flow. They have a predictable business model. So that's why I'm going to hold it. And at the same time, when it comes to interest bearing debt, is actually quite low, as well as the 5-year growth rate is about just 5%. So I will be holding on to this company. I would love to add to it once it comes back down. Next one is very similar to that company, and that is Colgate. Colgate is an old company and is one of those kind of predictable business. You know what you expect, that like 3%, 4% growth. But the reason I own it is not because the high growth, whatever. I own it because of, number one, is the dividends, and number two, they're not even dividend growth company, but at the same time, they kind of balance the portfolio. You can't have a high flyers without actually these slow growers. So it kind of basically reduces the volatility of your overall portfolio. And that's the whole reason why portfolio management is very, very important. Because if you had all high flyers and they all go down 10%, 5% every single day, that you screwed, right? But if you have these slow growers, when all the tech companies are going down, you know what they do? They go up. Right now, these companies are overvalued. Why? Because in the last 6 months, they have been going up. when, you know, Broadcom and Qualcomm and whatever are all kind of going down on 20-30%. So you need this kind of company, and that's one of the reasons why you will see next 4 companies in my portfolio. So when you look at the companies like RB, for example, Unilever, they are in a very similar situation. Predictable businesses that we buy every day. Go to the grocery shop and you will be buying their products without thinking about it. And as you can see, every single one of these companies has good financials. They have a good free cash flow here. They've got payouts quite low, okay? And then you've got the growth of the dividends is not great, but is, you know, more than, especially when especially when inflation is quite high and quite low, it's just 2%, whatever. These companies will beat inflation and will give you a nice dividend in return, right? So yeah, those are some of the companies that I will definitely be holding on to, right? So we've got 3 more companies to show you. So the next one is J&J, very similar to these companies. Again, is this pharmaceutical company. They are doing spin-off some very soon. They have $17 billion basically free cash flow, which is absolutely amazing. Almost $18 billion, 45% payout ratio, 6% growth wise in terms of dividend, 14% when it comes to return on invested capital, and then a 5-year growth rate of just about 4%. Interest-bearing debt really low, and definitely a hold for me. The next 2 companies are very similar, okay? Merck and Medtronic. Both of these companies are absolutely great. I really like both of them. They have wide economic moat. Medtronic is really undervalued at the moment in my opinion. I have been buying. I will be buying more of. Merck has gone up a little bit, so I'm gonna leave it for quite some time. I think I'm up almost like £600 or something along those lines, right? So the plan is the 15 companies that you've seen right now on the top, I'm definitely going to hold on to them. The only one that I have a question mark next to it is basically Qualcomm. And the reason is because of this growth in the next 5 years. That worries me a little bit. And because if there are other companies out there that are growing 5 or more percent, right? Or even more than that, then I rather take this money and put it into those companies. So I am definitely looking at this company in more detail the next few days and next few weeks, and I'll let you know how it goes. So we are midway through. I'm going to stop this video because it's going to be otherwise very, very long video. So we've done 15 different companies. And like I said to you guys, this is my portfolio. You need to do the same thing for your own portfolios. You might have other criteria. So I might be looking at return on invested capital. You might be looking at profit margins. You might be looking at return on equity. All of the other stuff that is good. For me, I feel like these are some of the things I'm looking for. Not necessarily just the only things, but some of the things that is helping me to make this decision moving forward, inshallah. And if you enjoy this kind of content, please let me know. If you have any questions, okay. At the same time, like the video, subscribe to the channel. Let me know if you own any of these companies. Let me know what you think. For example, if you own Salesforce, and now some of you do, what is your plan? What do you think about the fact that the 2 of the CEOs have left recently? I've got a video coming up. I'll let you know my opinion on more details on that one. But what is your opinion on that? What is going on? Okay, what is going on in the business? Do you have any insight to it? Or do you use their software, for example? Okay, just let me know what you think. We've got another 15 more companies coming up, okay, plus the ETF. So we'll make that another 15, obviously, out of the 29 companies that I own so far. And as you can see here, the portfolio is still about 61,000, whatever. It's going up the right directions. I've been paid a little bit of dividend in the last couple of days, so I will be reinvesting that. And as you can see right now, utilization, I'm almost up 60% or basically utilized. Like I said, I will definitely be maxing this before the end of the year. And when that happens, what I'm going to do is, inshallah, is you put more money into the family portfolio. So if I max out this before April, right, then I will be using the family portfolio to actually put more money into that. Okay, have a wonderful day. Assalamu alaikum. Take care.